How to Build a Business in a Pandemic. Brought to you by the Business and Brews Show and Trek CBD. Ladies and gentlemen, welcome back once again. How to Build a Business in the Middle of a Pandemic. So this is Nick. And Nick, tell us about what we just talked about in the last two episodes.
I so much enjoyed the last episodes because we recorded our intro one, which if you haven't watched it, please watch it. You'll get a little background on myself and also on Ryan, and Gavin joined us as well too. So it was really cool. But I've just been really geeked out about this whole topic about building a business in a pandemic because I still get questions from like my old job. I was going back and forth with somebody today on Facebook Messenger who wants to go out and start their own business, and they're curious and they're trying to get time on my calendar, and I'm dying to talk to them too because I love to talk to entrepreneurs and kind of hear their thought process, what they have. But this is a good time to build a business. There is no doubt. If you look at any economic downturn, businesses are built during those times. So I'm just, like I said, geeked out about the fact that you and I get a chance to talk about this. And again, if you didn't listen to the intro, we're going to give you more of the background, the more practical real life experience. There's a lot of websites out there that's going to give you the play by play. That's not what this is about. We wanted to make this real. We wanted to give you something that in 20 minutes you can digest while you're either doing other things or on your commute if you're going into an office to do that. So let's just kind of jump right into it. But our first episode, other than our intro, we talked about, how do you basically do your market research? Yeah. You've got this idea that's just, keeping you awake at night, this idea for a business, this idea for a product, whatever it is, right? That's what entrepreneurs start with, right? And then you're trying, how do I take this from idea to execution? And a lot of that starts with the market research that we talked about. So does my idea have any legs? Is there a market for this? Is there a customer for this? And we're not going to go through that right now because we already went through it, but that's where that idea starts to become a reality and that ball starts to kind of roll downhill a little bit. So today, you've done your market research, okay? You've kind of got to know what your customer is going to be because who you're going to be selling to, essentially. You've done your demographics and all that. You've hopefully landed on a concept, meaning how am I going to sell this? What channel am I going to use? Am I going to use something like an e-commerce? Am I going to use a physical retail location like we're sitting in today at Trek CBD? You've got all that ironed out, but then you need to fund this thing somehow. And you and I have funded different things in different ways. We're going to talk about today, how do you get some money, bottom line, to make your dream a reality? Does that capture it?
Yeah, that is the bottom line, isn't it?
It is.
Because at the end of the day, like so many people want to throw all these fancy words, financing and funding and investors and this and that and the third. But, mom and pop are just sitting there and they're going, we got this idea. I don't have any money.
Right.
Or maybe I don't want to use my own.
Yeah.
And
sure.
I think there's value to both of those. So really answering those questions, and I know you have quite a bit of experience with that. I'm really interested because I know, Nick, that you went kind of the investor route.
Yes.
So I'm really curious, like what that looks like, especially from the beginning.
Yeah. The good news is that there's more than one option out there. So if you're sitting there right now saying, hey, listen, I want to start a business, but there's no way I can get money. No. There's a lot of ways to get money. Okay. And we're going to go through all that today. And what we taught you in the first episode is going to help you get into those conversations. So yeah, myself and my business partner, we decided to go the investor route. So why? A couple different reasons, essentially. Number one, we're in the CBD space. So you can't go to a traditional bank or you can't go to the SBA and get money. Okay. Money for cannabis has just not opened up yet. Hopefully within the next 18 to 24 months, it's going to with something that's called the Safe Banking Act, where it'll open up, but that wasn't an option for us. So then we did kind of review the options and we said, okay, myself and my partner, we could dump in a bunch of our own money. We could pull a couple $100,000 together and invest it. Or we said, you know what? We could bring on an investor, or what we looked at it more of was a strategic partner. And that's what we were looking for because we had a list of people Now, these are just people through experience, right? So everybody knows a list of people. This could be, for you, it could be a family member. It could be a friend. For us, it was more business associates, people that we had met over the years, contacts on LinkedIn, people that we knew that were grounded in business, but also had money to invest. But there's no right or wrong answer here on how you raise your money. So we went the investor route, and we put together an investor presentation where it was probably just 5 things we wanted to talk about with any investor. But it did really start with, hey, this is the market. I always believe in starting with the big picture. So this is the market. In our case, this is the market for CBD. And when I'm sitting in front of an investor and I said, hey, listen, it's right now it's south of $1 billion back in 2018, but where it's projected to go, and then you can reference, hey, we did our market research through a company called Brightfield Group. It's expected to go to $20+ billion by 2025, next 5 years. If you're an investor, is that going to turn your head?
Absolutely.
Right. Big market, right? But then even more so, taking it down and saying, okay, and we're presenting to this investor, this is the reason why we chose to do a retail store and not an e-commerce basic brand. And we do both, but they're, as you know, of starting e-commerce brands, they're distinctly different things. You are either a first and foremost e-commerce brand or you're a first and foremost retail brand. If you try to be everything to everybody, you're probably going to fail. We do sell online, of course we do, but our focus is expanding our retail footprint. So why did we choose that? Not just because, hey, it was comfortable to open up a retail store and we have a great community here in Wake Forest, but we did it because in our market research, and we were thinking about what our customers needing and wanting, they needed and wanted education. So we said, well, how can you best educate somebody who's curious about CBD? That came down to a retail footprint. And that was backed up by a lot of the analogs that said in this industry, for the next 5 years or so, you're going to see the retail sector grow exponentially, along with e-commerce. But that also answered a lot of the objections already up front that an investor might have to be like, hey, you know what? In this day and age, when every other business is going online and essentially closing down all their stores, why are you opening up a retail footprint?
Yeah.
So we could answer that, not just with our gut, but also with some data behind it. So we started building that story, again, about 5 different things about the demographic research, the customer research. But then it came down to, okay, doing your due diligence, right? Around what is it actually going to take to put together a retail store? How much? For fixtures, for equipment,
Yep.
right? For inventory, obviously the big thing there, for labor, all that, putting those projections down, which then led us to kind of break out a rudimentary, pro forma or forecast. And
Yeah.
I spent the last 20 years in corporate America, and I kind of laugh about that because I will say this with all my heart, I've rarely met a forecast that I liked. But again, we built our forecast off of people that we knew in the category on real retail stores. They were people that were doing business with CBD in a retail store. So again, when we went to an investor and they came from similar backgrounds as myself and my business partner, and they said, seriously, you're going to do X amount of sales your first year? We said, yeah. So no, we're not just blind optimists here. We know other examples that we can use that are going to have a similar concept to ours that are making X amount of dollars right now.
Nice.
Again, kind of just answering the questions until you basically get down to that last slide, right? Or that last thing about how much do you need? How much do you want? That kind of thing. And that's where we had a figure in mind where we said, okay, this is the exact money we need. We pitched it on, we want to open up not 1 store, but 2 stores.
Yep.
And this is what we're going to need from everything from getting the store out of the ground to turning it around to buying the fixtures to buying the inventory, having some operating capital for marketing. And we're going to talk about that in another episode about how important marketing is to a new brand. But all those things we had X'd out. And of course, it's a negotiation, right? Who wouldn't it be when you're talking to an investor and you ask for X and they say, well, wait a minute, I'm willing to give you Y, but that's how you might choose your investor.
Yeah.
So we did all that, but I want to take a step back for 1 second and say that we looked at it a little differently. We looked at it in the fact that, yeah, we could put up our own money, but then that's all of our risk, right? So if this thing goes bust, like you read the statistics, it could, right? Then we're going to be on the line for all that. We wanted to flip it around and say, you know what? We don't believe we're going to fail because that's why we're doing this. So we can't look at it from that aspect because we are all in, essentially.
Right.
But we looked at it from the list of people we had. Who would we really want to be in business with? Now, these are people that could own 10 to, I don't know, you look at Shark Tank, 30% of your business.
Yeah.
But who do you want to be in business with? And for us, the person that chose us to do business with couldn't be better. He compliments myself and he compliments Scott in terms of he's a chief financial officer. So he has a very strategic outlook in terms of how to grow stores, not only strategically, but also from a bottom line perspective. So we lucked out by finding an investor that, of course, he's not going to give us 100% of his time, but the time that he gives us, it's like having a consultant working with you that can actually kind of shape your thinking. So we looked at it that way, about not just a financial thing about gaining the money, but we were willing to take less from certain investors because they brought more to the table. Now, somebody that's totally hands off, that's not going to do anything with your business, you might decide on less, because it all comes down to one thing. You're going to have to decide how much of your business you want to give up. And there's certainly formulas out there, about how much equity you give somebody. For us, it was how much expertise are they giving us?
Yeah.
And what we found, actually, to be completely honest with everybody listening, what we found in the value we found in the person we're in business with, we were willing to give up more equity.
Nice.
Because it was worth it with us.
Nice.
And I think you see that on Shark Tank. I know my kids and I watch Shark Tank with my wife, and often that's the case, right? You want a certain shark on board with you, and you'll make a deal to get that shark with you.
Definitely.
Yeah. Mm-hmm.
And there's always something they bring to the table. And, sometimes I see them once in a while, they'll get offers from multiples and then have to negotiate, which one do I want for what purpose? So that's a really good analogy, and that puts a really clear picture on it. So obviously I went a little bit different route.
Yeah, tell me more about that.
It's super interesting. So initially, like from a ground up e-commerce store, obviously most people selling on Amazon start with books. I found them to be super high velocity, profitable enough to get the wheels turning. And as I continued to do that, and as I continue to do that today, I find out what works and I continue with it. So building that revenue and increasing it. And what I found is, just to bring us forward to today, I have 3 virtual assistants, and 2 of them focus on specific marketplaces, and one of them was primarily writing. And I said, okay, well, the writing and SEO, the content creation, is not profitable as quickly as selling the products.
Correct.
So I said, look, you can still write, but I really need you to put more focus into our marketplaces. And so now he's doing what the others are doing. And I found a lot of success in a single marketplace. So I'm not shifting the other one away, but I've definitely dedicated a little bit more time because my average sell price for one marketplace is maybe about $6. And my average sale price for another marketplace, same product, used books, but the average sale price for the other one is about $11. And so
interesting.
Yeah.
Okay.
And I thought so too. And I also thought it was interesting how sometimes my price on a used book might be higher than Amazon, but move because it's in front of a different audience. So really just taking a look at those numbers and saying, okay, right now, the first time I did this, I didn't keep track of my numbers well enough. So I wasn't seeing, okay, well, how much revenue am I bringing in? What's my operating cost? So the key thing I did going back to when I first started is I was like, okay, well, I'm getting all these books. I'm able to get them in bulk. And one thing I was willing to do that a lot of people aren't willing to do is risk bulk purchasing.
Okay.
So if I go into a used bookstore, or thrift store or whatever, they might have consistent pricing for all the books, paperback, hardback. They might have them priced individually. I know a store that literally gets a book. They look it up on Amazon. They price it based off the used price on Amazon, put a sticker on it,
right.
All different kinds of stuff. And there's a software that I use that you can take out there with PDA. You just scan the book, and when it dings, you keep it. When it buzzes, you put it back on the shelf. It's crazy. It speeds up the process. So the challenge there is you might scan a book that costs you $5 and be able to sell it for $15. If you go based off the rule of thirds, you're making roughly about a $5 profit on that, which is pretty nice. But you might spend, 10 hours in a bookstore scanning all their books to find 20 of those. Maybe you have to go to 3 bookstores. Maybe you're doing all the labor. So I'm like, all right, well, what if I could bring the books to me? And so I started bulk purchasing. You look it up on the internet, you find people selling their junk books, build a relationship with them, which kind of gets into the supplier conversation that we're going to hold later. But the point is that if I spend one day in a bookstore and I get 20 books, I might spend, I don't know, 200 to 400 bucks. I could get an entire pallet of books for around the same price.
Love that.
Sometimes even 50% less. So if I'm able to buy an entire pallet of books for $100, I'm taking the same risk that I take at the bookstore, but now it speeds up my process because all the books come to me and I just scan through them. The junk ones go over there. The good ones go right there.
And Ryan, so when you started this, you funded it totally yourself, right?
Yeah.
You just bootstrapped it and that's all you did, right?
$20 in Dollar Tree.
$20 in Dollar Tree. Okay.
I took that. I was like, what is my initial investment going to be? How much am I willing to risk? I was like, well, if I spend $20 and I lose it all, I'm probably okay with that.
I think you're right.
So it was like, all right. So I went down to Dollar Tree. I took my basic knowledge, which I gained off the internet, just reading stuff. I said, I'm going to buy 20 items for $20. It's Dollar Tree. It's $1 each. After tax, sent it in. As soon as the stuff hit the Amazon warehouse, things started selling. I was like, well, this works. And that's when I figured out how to scale it.
Yeah.
Like I was like, all right, well, if I buy it in the store, I have to pay tax. So if I register an LLC, I can get a tax exempt. So I started doing that. So that eliminated tax. Then if I bought it from Dollar Tree's website, they would ship it to the store. There's a Dollar Tree right next to my house. I could buy, instead of one, I could buy a case, but I didn't have to pay for shipping. Got a lower price, paid no taxes. Then I got an account with ShareASale, which was an affiliate page. So I'm making purchases through my own affiliate link and getting money from that.
Very cool.
So I was getting dollar items for less than $1. I can't remember the margins, but that's how I was able to increase my profit margin. So I'm underbidding other people because everyone that first starts on Amazon was doing the same thing. But those people are spending the time and the gas to go to the Dollar Tree when I'm at home. And then eventually I would teach a virtual assistant to make those purchases, do that research. It's basically a combination between online and retail arbitrage. Then I learned about online arbitrage. I had stuff shipped to Montana, so I didn't have to pay sales tax. Look at the profit margins. I had a prep center out there, so she did all the prep, sent it in to Amazon. It was basically a hands-off business. That's essentially what Gavin did to fund his real estate stuff. Is he automated an online arbitrage Amazon business.
It's amazing.
And I've got friends that do this stuff all the time. But in bootstrapping it without having those investors, without having that option of, okay, how much money do I need and where can I get it? Loans, this, that, and the third. $20 and really just how can I get that cost down and how can I increase that profit? And buying in bulk not just allowed me to do that, but then eventually I made the decision to open a bookstore. And I'm going to tell you why that was advantageous, because some people are like, you're crazy. Used bookstores are going out. It's stupid. It's not going to work. I had to close it. So that's very much evidence of them being right. Except I was paying $100 to $200 per pallet of books to get 1, 2, maybe 3 delivered to a storage unit. I was paying, I don't know, $100, $200 a month for, right? I already got to process the books. I got to pay the freight to get them there. What's my overhead?
Yep.
I'm paying $100 for a pallet of books. Then I got to pay freight. Usually, even though my dad runs a freight company, just starting a truck might cost you somewhere around $300, especially LTL. If I'm not doing a full truckload, and even with Uber Freight these days, like it's still
not there. Yeah.
It's still pricey. Then you got to pay for liftgate service. If you get it sent to the house, you got to pay a residential fee. After hours, before hours, weekend hours. You see what I'm saying? So that $100 pallet, if I just get one, might cost me $500. That's not conducive.
No.
So I'm like, okay, so how can I decrease my cost and increase my profits? But the problem is, if I buy in more in bulk to get a full truckload, I don't know what I'm going to do with my duds. Because at the time I donate them, I get a write-off that's pretty sufficient to make it worth it, But I'm like, what if I could liquidate them? What if I could sell them to people that don't buy online? What if I could offer them to people who would pay $1 to $3 to $4 for a decent book that they want to read, that they want to touch?
Yep.
And so that's why I opened the bookstore, because now instead of getting one pallet for $500 with freight, because my freight cost doesn't increase, it's the same truck, it's the same trailer. The only difference is before it was one pallet. Now I was able to get 20 pallets. I had a 1,500 square foot place. We had a front, we had a back. Have them delivered, bring the lift gate out, roll them all in, double stack, sort through them, take some carts, shelve them up. So, if you're looking at average cost per book in the $100 pallet, it cost me $500 to get it delivered. If you just look at the $100, maybe looking at 20 to 25 cents per book, depending on how many books were in there. I got my average cost per book landed, so before anybody touched it for labor costs, down under 5 cents per book, just ordering in bulk.
Wow.
So too many people look at that and they're like, yeah, but that one's not going to make you any money. You can't look at it like that. You have to look at it like every single book is going to make you some money. If I had to take a book and put it on a shelf and sell it for what my average cost per book was, if it gets out the door and it's recouping that cost, there's books that were in there that were selling for $50 on Amazon. So it made it all worth it. I increased my profit margin. I increased my average selling price. I increased my volume and velocity because I was getting more books. I had not just Amazon. I was selling Amazon, eBay, Shopify through my website, I was selling on Facebook, Mercari. I had virtual assistants. And now I had a bookstore. And they would walk out the front. The best thing of all was most people paid cash.
Man, there's so much to think about there. But what I love about this whole thing that you're talking about there is that it doesn't matter how you fund the business, right? So again, you did it for yourself on $20. We went to an investor because we needed a bigger investment. You are going to have to figure a way to squeeze 20 cents out of a dime. And everything you just talked about is exactly in there. You knew every single cost that you had. And when you were going through the analogies, it made me nervous when you gave an example of a business owner that just priced their books off whatever it was on Amazon, because that could be a good strategy, but it could be a bad strategy because Amazon's cost structure is not the same as yours.
Right.
And at the end of the day, if you're charging the same amount as Amazon is, but you're losing more money on that book because we all know Amazon doesn't have a retail location, et cetera, right? That's the importance of knowing your costs. And I love that because you can tell that you've built that $20 into a revenue stream that's self-funding, right?
Yeah.
Self-funding itself. Yeah. That's how you keep it going. Doesn't matter how much money you get up front, but that's how you keep it going over time, by having each entity fund itself and also make you money along the way.
And what's great about it is because I learned so many hard lessons through that, I was able to take the same model where I'm basically, what I've got going on now is a rebuild, so I'm not rolling in dough by any means.
No,
but
it's not pretty.
My cost per book that I talked about before is effectively zero. Because I shifted gears into more of a service-based business, which I was only able to do through the professional relationships I established when I was first starting out.
Yeah, because I'm always focused on, you hear the term out there, the burn rate, right? And you'll, again, to quote the TV show Shark Tank, you'll watch people on Shark Tank that are entrepreneurs that don't know or don't focus on the things that you were talking about from a profit and loss perspective, and they're burning cash because of it, just burning through cash. And not only is that not profitable, and don't get me wrong, there's times when you need to burn through cash because you need to get a new business off the ground, but if that's not sustainable long term, and that's going to make whatever money you raise or whatnot, just that much harder to hold on to.
I think at the end of the day, Nick, everything we just talked about really sums up into one thing.
Yeah.
And that's knowing your numbers.
Knowing your numbers. No doubt. Nothing, whether it's quick story about this. So my uncle, who unfortunately just passed away, started 30 years ago, started a pizza truck. Now, this is a guy that did not have a background in food, but he was always entrepreneurial my whole life. He was my dad's brother, and he was either starting a limo service or something like that. And he started this pizza truck from scratch 30 years ago. And I was like in high school at the time, like, well, why is Uncle Rennie, starting a pizza business? I never knew him to cook, at all. made it successful today. The same truck has been passed on to his son right now. Jerry is doing a bang out job with the business. But when I went up to Massachusetts for the funeral, his son shared with me a bunch of his notebooks. In his notebook, every single day, he had a profit and loss statement for his business. So again, you don't have to be an Excel guru or anything, but you need to know your costs. And his costs were food, gas, right? Rudimentary, this is what I took in for cash wise, yada, 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 to come out with a net number.
Yeah.
He was a sole proprietor, but he knew exactly like you knew, Ryan, every single cost that he had, and he could probably recite his sales back going for 5 years. So knowing your numbers, like you said, is critical. Doesn't matter how you do it, but you got to know them.
Absolutely.
Yep.
100%. Well, that was exciting, man.
Me too. Yeah.
So tell me a little bit, because we're moving into the next episode. So
Yeah.
this is really exciting. I know folks don't want to have to wait, but our next episode,
It's okay.
it's coming up. So we've already talked about market research.
Sure.
This episode was on funding.
Yep.
So next episode, I think we're talking about branding.
Branding. Yeah. The thing over our shoulder right now, branding. So let's do that.
Yeah.
I just want to say, appreciate everybody who's following us and who's listening to the channel. We want this to be interactive. So if there's a topic you want us to cover, or if you need more information about what we talked about today, it's in the show notes. Just reach out to myself and Ryan. We are here for one reason. We know you have great ideas that you might want to, right now in the middle of a pandemic, put into execution, and we want to see you thrive, and we want to help you along the way. So
Absolutely.
No.
Thanks so much, everyone, for listening in, and we will see you on the next episode.
sounds great.
How to build a business during a pandemic. This show is brought to you by Trek CBD. You can check them out at trekcbd.com. Written and produced by the Business and Brew Show. Find more episodes at businessandbrewshow.com. Hosted by Nick Pione and Ryan Smelt. Guest host Gavin